Welcome to the Irish Farmers Journal Weekly Podcast, brought to you by Ornua, the home of Irish dairy.
Hello, Patrick Donoghue here, news editor with the Irish Farmers Journal. We have a lot of headlines about Glambia in this week's Irish Farmers Journal. The company has cut its September milk price and has announced that it will pay €130 a tonne for green barley. Many farmers feel those prices are too low, and our editor Justin McCarthy sat down with dairy specialist Aidan Brennan, news correspondent Pat O'Toole and our agribusiness editor Owen Lowry to discuss how Glambia is doing business at the moment.
Aidan, if I could go to you first, just in relation to the milk price, what reaction have you heard from farmers in relation to the Glambia milk price?
Yeah, Justin, there's a good bit of angst and disappointment, I suppose, about the 24 cent a litre what GII are actually offering. So I suppose we need to separate, well, what farmers are telling me is they're looking at milk price and they're saying it's 24 cent a litre, not the 25 cent a litre. They see the cent as being their own money that they're getting back.
That cent that's coming from the co-op.
Yeah, exactly. It's their money, really, I suppose, is what they're saying. And I suppose there's a fair bit of disappointment because they're looking at other processors, like particular Carberry in the West Cork co-ops, and they're paying 28.9, and that's a huge difference over September milk supply of...
Roughly what would it be?
So roughly, Justin, for a farmer with, let's say, 100 cows producing 30,000 litres in September, that almost 5 cent differential between Glambia and Carberry is worth in or around €1,500 to him over that month, which is quite a lot of money. Mm-hmm. So, they're looking at that. I mean, fair enough, if that's what the market was delivering, they probably accept that. But there's obviously differences in management, differences in product mix that other processors are capitalising on, and Glambia aren't. And they're saying that what's wrong, because they've invested heavily in Bellevue, in other processing sites, and they're wondering, are they going to get a return on that?
Owen, Aidan mentions the difference in management, and I think that's something you go into this week on the agri-business side. Just maybe talk us through that difference in management, and maybe something you tease out, I see in your article, the operating margin of GII compared to maybe some of the other co-ops.
Yeah, I think it helps to stand back a little bit from Glambia, and it has changed over the last number of years, where it is now, I suppose, 3 entities, where the co-op owns 60% of the processing arm of GII when it was set up in 2012, with the other 40% owned by the PLC. And I suppose the PLC is that engine that's driving the whole 3 Glambias, if you want to call them that, and it has the dividends that's providing the income stream to the co-op, which then the co-op is using to support the milk price to reference of the 1 cent that Aidan has spoken about, but it is also using that to support grain price to the tune of about €5 a tonne. And it's very transparent, but it's actually extremely complicated. But the joint venture itself, GII, it is a joint venture in which the PLC has an investment, and it wants to return a margin to itself and make a return on its investment, which has been 4%. For the past couple of years.
And how would that compare to the other co-ops, though?
Which that places it double of what the industry norm would be of about 2%, but which is not a bad thing. That's a great return as long as the milk price is not delivering that, which Glambia, in fairness, it hasn't been over the last year, because it has been the fourth in the milk league.
Mm-hmm. And I think it is worth pointing out in the context of this that Glambia probably will be quite strong in the KPMG milk league for 2015, because they did even pay quite a strong milk price in the first half of the year when volumes were actually up as well.
True, yeah, that's a fair point.
Yeah. Oh, and if I could just go back before we go on to the grain thing, because I think you mentioned a very important point there in terms of that operating margin. How integral to the GII model is maintaining that operating margin? Because I have heard that, we need to maintain our operating margin at 3.8 to 4% because of covenants in terms of given to banks for levels of debt and borrowing. GII did put out at the outset that they were going to do a lot of heavy lifting, e.g. a lot of investment in the first period, and during that period they would need to maintain operating margins. But there is a commitment to drop that operating margin back when maybe some of the heavy lifting is flushed through the system and debt is paid down. What way do you read that?
Yeah, I think, look, let's not forget, GII is a very well invested milk processing arm. Where farmers originally invested when the shares were spun out in 2012, but since then it's invested 235 million, which has given it a high debt of about 170 million, and it needs to pay that debt down. And to do that, I suppose banks would like to see high margins to pay down the debt, and it will do so over the next 3 to 4 years. However, it also is expected that a dividend will need to go back to the PLC, and I suppose the debt is one of the main reasons why the margins need to be maintained.
So if GII took the decision that it was going to reduce its operating margin, say back to the industry norm of 1.8 to 2%, how would farmers see that?
1 cent a litre to Glambia means a bill of about 18 million, which would see the operating margin fall from its current 4% to about 2%.
Ultimately, while the 24 cent is in the limelight now, on what dairy farmers, and Aidan, you can come in on this as well, what dairy farmers will actually look at in the totality of 2015 is the operating margin relative to where they are in the KPMG 2015 Milk League. That's the ultimate. Okay, they're in the spotlight this month because of the 24 cent, but where do you think they'll finish up on that? Will they maintain that operating margin, and how will it then impact on their Milk League position?
Well, Glambia, GII have been very clear in that they expect the future margins of the business to be in the region of 3.5% to 4%, which means that the milk price will be, I suppose, in some ways supporting that margin, because if they paid 1 cent more, the margins would be 2%. Mm-hmm. So the weaker milk price will be supporting a higher margin.
I would presume the counter argument to that on a farmer's behalf, Aidan, will be, well, we've invested all this money, it should be delivering efficiencies, and that's where the margin should be coming out of, not the milk price.
Absolutely, yeah. But I mean, even at 24 cents a litre, that's below the cost of production for most farms. Yeah. So while it's all well and good to say KPMG will show up positive, I mean, they need the money this month, because they need to pay the meal suppliers, they need to pay the contractors.
But Aidan, how realistic is, okay, I accept the 24 cent a litre is the base price, and that's the cost of production, but when you take in, and we've had a very good grass growing year, milk, solids are up, what's the actual milk price going to be?
Price for Glambia, I think it's somewhere around 28 cents a litre or thereabouts for September. I could be wrong in that.
Yeah.
But I mean, like, okay, there's more farmers can do to improve that by breeding for higher solids and better.
But that's a long-term project.
It's a long-term thing. But I mean, the majority, there's a lot of liquid milk suppliers in the Glambia region who have higher costs, built into their systems, and that's Glambia promoting that. Like, so, it's a difficult pill for a lot of guys to swallow.
Speaking of difficult pills, Pat, the grain guys are also swallowing one at the minute. They have, I suppose, ironically, nearly planted next year's crop before they actually knew what they were going to get for the crop they had just harvested, and certainly there was no good news there.
No, Glambia have come in at the very bottom of the market. They announced their prices in the middle of last week. €130 for barley at 20% moisture, 138 for wheat. Farmers were not just disappointed, they're really angry, and I suppose there is a €5 top up on that. It's to co-op members only. Far less grain suppliers are co-op members, a lower proportion than of milk producers, because initially Glambia was set up as an amalgamation of two dairy co-ops, Waterford and Avonmore. The reality is, I'd be surprised if more than half the grain suppliers are currently co-op members. Now, they will be given the opportunity to share up, but it's going to come at significant cost. And that fiver can be availed of. But farmers are looking on this as €130 full stop. Most merchants now include some kind of loyalty bonus, but it's unconditional. As long as you buy your inputs off them and you sell them the grain, you get the bonus.
Pat, we're just looking here at Owen's infographic on his agribusiness page, and it shows, I suppose, the level of support provided to the co-op to tillage farmers at around €17 an acre. And Owen, you go into details on how you calculate that. And the average support to a dairy farmer of closer to 59, closer to €60 an acre, and that's based on a farmer with 100 acres producing 500,000 litres. There's a big disparity there, and I think it's also very important to point out that it's the PLC that's buying the grain, but it's the co-op that's paying that premium.
The simplest way to assess how Glambia are operating with their customers, and the way farmers look at it, is Glambia as one entity. You've got the three separate. It's almost like the Holy Trinity. You've got GII, the PLC and the co-op. But when it comes down to it, farmers dealing with Glambia, you're buying off Glambia, you're selling to Glambia. And I think, again, looking at it from the grain farmer, there are three elements. The co-op support you talked about rightly, whereas you're selling to the PLC, agribusinesses within the PLC, which drives that model. They're looking for margin. But they aren't progressive in other ways. Like when you're talking about milk price, one thing that has to be factored in is that Glambia pioneered the forward pricing. So an awful lot of Glambia suppliers have fixed at least 1/5 of their milk at 32 cent, which is a very good price in the current market. It looked poor this time last year, and that's fixed forward and sold forward at the other end. They have the same provision for grain farmers. Since the last huge ruckus between Glambia and farmers, when there were caravans outside depots and there was a blockade back in 2008, the instruction was that Glambia should go away and come up with a better model, and Glambia now offer forward pricing, and they've put in a lot of premium products. We've all been in their oatmeal. They've got the new dedicated oat intake in Ballator. They've the new oatmeal in Portlaoise.
Are they renegotiating those contracts at the minute, Pat?
They are renegotiating the oat contract. What they want to do is only pay the premium on 80% of the tonnage delivered. So that's an issue. Farmers aren't happy about that, but you constantly have flux with all companies in relation to that. But I think the key here, you've got the investment, you've got progressive price models. Those are positives for Glambia. But the reality is they have a very hard approach to the bottom line. They're ruthless. They're a PLC, and the price isn't good enough. It's at least a 5 short in barley, 7 in wheat, and 10 in oats according to IFA, and that's the crux of the matter right now. Well, show me the money.
Cost of production, Pat. I know Andy Doyle had it in the paper recently in the Farmers Journal a few weeks ago. How does this 130? I know we've had good yields, but how does this 130 correlate with the cost of production?
It comes down to one thing. For the better operators on their own land, or on a large proportion of their own land, it's viable. For someone who's renting land, it's not viable. And
50% of tillage crops are grown on rented land, which is ultimately a huge problem. Owen, maybe just going back to you to wrap up. Where's this all going to pan out, and what are we going to see in the next week or 10 days? Do you think will pressure come on Glambia to increase that grain price? Can they increase that grain price? And will they just keep their heads down in relation to the milk price and ride out the storm?
Again, looking at what they have stated, and that is that they will pay commercial market rates for grain and milk, which is what you could argue that they are doing right now. I suppose what people and farmers really want to see is that the investments that they've made into either the dairy or through their co-op and the grain side, that these start to come into play now, and they start to get a return on some of that through the prices. Right now it seems to be difficult to see how that's going to come true.
Okay, Aidan, Pat, Owen, thank you very much. For further coverage, we have extensive coverage this week on the whole Glambia model, both on our news pages in terms of farmer reaction and indeed a lot of farmer anger. And we have 2 pages of a deep dive into Glambia supports questioned by Owen Lowry on this week's agribusiness pages.
You're listening to the Irish Farmers Journal podcast, brought to you by Ornua, the home of Irish dairy.
So I'm still here with Owen Lowry, our agribusiness editor, and we're going to discuss the upcoming EGMs for both FBD Holdings and FBD Developments. Owen, shareholders for both Holdings and Developments will descend in the Farm Centre Thursday to vote on FBD Developments acquiring 100% of the property and leisure business, formerly operated as a 50-50 joint venture between the two organisations. What exactly are shareholders voting on, and how did we end up in this position?
Well, Justin, FBD has had a terrible bad year over the last 12 months, and this comes in the backdrop of a very tough insurance market in which it's operating. It announced in June that it had lost €96 million, and it is also keeping an eye on these new regulations that are coming in from Europe around solvency, where it needs to bolster its reserves. Against that backdrop, it has decided that it needs to divest its investment in the hotels business to raise capital. It also got 70 million a couple of weeks ago from Fairfax in exchange for possible shareholding in the company in the future.
But with a 7% return.
That's right. Fairfax, who were also invested in Bank of Ireland at the time of the crisis, they'll get 7% return for the next 3 to 5 years, and then they have the option to convert that into a shareholding in the business.
The dilution factor then, what will happen to FBD Developments that have in and around 25%?
So again, for our listeners, I think it helps to explain that Developments is the original co-op that was founded when farmers originally put in the 1960s to start an insurance company. Right now, Developments, or the original co-op, own about 25% of the insurance holding company. If Fairfax, which they probably will, convert their investment into a shareholding, this will have the effect of reducing or diluting down the farmer shareholding down to 19-20%.
Yeah. There's a lot of detail involved in this deal, and we've covered it extensively in the Farmers Journal, and those articles are available on farmersjournal.ie. So, and just going back to the nub of the EGMs, what is likely to play out here?
So really what's happening is there's two EGMs happening. The first EGM will be in relation to FBD Holdings, the PLC, which will vote on whether it should agree to divest its interest in the hotels business. And the second EGM will be developments, the farmers voting to accept or to buy the 50% shareholding owned by Holdings and bring it over onto the farmer development side, which in simple terms means that this business on paper is worth 100 million. It's split 50-50 currently between developments and the holding company. The developments now will take the other 50 million. They're spending 48.5 million to buy out their joint venture partner, and to do so they will raise further funds of about 25 million and will end up as sole owner of 5 hotels, 3 of them in Ireland and 2 of them in Spain, with a worth on paper 100 million, with a debt of around 45 million in total.
Presuming the proposed deal goes ahead, we're going to see a very, very different FBD developments at the end of tomorrow.
Yeah, and I think go back to what FBD Developments was set up to do. It was set up to provide insurance to farmers at a competitive price down through the years, and it has done so, and FBD has delivered that insurance, and there has been loyal support to FBD down through the years. What it has morphed into is an investment company, where it has its majority holding is held in FBD Holdings, the PLC,
which would be under threat if Fairfax converted.
Absolutely, where we'll see the dilution possibly. And then they have this hotels investment now of 100 million, which will become their largest investment right now because of the low share price in FBD. It also has a smaller investment in a Berlin development near Berlin Airport, and a couple of equities and cash reserves as well. But it is an investment company, completely different to what it was originally set up to do.
And Owen, I suppose if you look back at FBD Developments in the past, it was a pretty benign investor in FBD Holdings, which yielded a very good dividend back to developments. It had low levels of debt, so it was quite a steady safe. Now it's suddenly catapulted itself, or assuming this proposal goes ahead, it will have catapulted itself into a property and leisure business with, and I think it's important to point out, quite significant levels of debt, which obviously comes risk.
Yeah, there's no doubt about it. There is risk involved in this investment. But firstly, you have to look at developments. Where does its income stream come from to service the debt? And right now, because its largest investment in FBD Holdings has decided that it won't be paying a dividend in the next couple of years at least, while it steadies its ship and turns itself around, that income stream will have ceased. And then coupled to that, there are no other income streams from the developments because they're land plays. So the only income stream it'll have will be from the investment it has in this hotels business. So then taking the hotels business on its own, and it's in its own right or merits as an investment, it is profitable. Okay, albeit that there's a huge amount of capital tied up in it. Last year it made a net profit of close to €2 million, or just a little bit over it. And it has a number of land development sales that it can unwind over the next few years. But it's a low margin business. And I think that's going to have to be considered in how it's going to service the debt, this high level of debt that it will now carry into the future.
Certainly plenty of questions for the shareholders to put to the respective boards. I think there will be plenty of questions both for the board and the management of FBD Holdings and indeed for the board of FBD Developments. Just, Owen, you mentioned there in terms of the huge farmer loyalty that there is to FBD, and I think that is a huge asset of Holdings. Do you see any risk of that farmer loyalty dissipating if, for example, FBD Developments shareholding was diluted and FBD slowly became another mainstream insurance company where maybe its attention, because of its change in its shareholder base, moved away from farmers?
I think farmers view insurance today like a lot of other services that they're buying in, and while they have remained loyal to FBD, and the service from FBD has been very high quality.
Especially around claims, Owen. I think that's definitely something.
And I think that's fair to say. I think they will pay a premium for that service. However, the premium has to be at a level that is just slightly above the average rate, or it has to be competitive, I suppose.
And that will be a challenge to FBD, given that they're paying 7% on borrowings, whereas some of their competitors will be paying, I presume, significantly lower levels of interest. Like 7% is quite a high interest rate to be paying on borrowings today.
Yeah, this recent capital raising round is going to cost them a lot of money. And it'll be interesting to see how that will play out in the future, in the profitability and the return dividends and in the premiums that farmers pay on the ground.
Certainly a lot of tough questions to be asked, and certainly the mood among shareholders at the EGMs will be very interesting to gauge, and we will certainly be following up on that as the day progresses on farmersjournal.ie. And as I said, we have a lot more information on farmersjournal.ie that we have covered over the last few months in the Farmers Journal. Owen, thank you very much.
We hope that you're enjoying this Irish Farmers Journal podcast, brought to you by Ornua, the home of Irish dairy. Find out more at farmersjournal.ie.
On Tuesday, the National Dairy Council and Kerrygold held their annual Quality Milk Award ceremony. The Irish Farmers Journal dairy editor Jack Kennedy was on the judging panel, and he takes us back to the award ceremony with online journalist Amy Fitzgibbon.
Jack, we're here in the Royal Kilmainham Hospital. What's the feeling like before the winner is announced?
Yeah, there's great excitement here, Amy, as we kind of wait for the winner to be announced. I mean, the farmers are here. They've gone through the judging process. Judges have been to the farm. They're eagerly anticipating who is going to be the winner. Nobody knows yet, so everyone is on tender hooks, kind of to find out who exactly is going to get the overall prize.
And how long have you been judging the awards, Jack?
The team, myself, David Leeson from Chocas Moor Park and Professor Patrick Wall from UCD have been judging this competition for the last 6 years. So every summer we take 2 or 3 weeks and we go around and monitor and measure these farms in terms of their quality milk results to see what kind of performance they can get, and we try and rank these in the best order that we can every year.
And how impressed have you been with the farms that you've seen over the summer?
Yeah, excellent. This year has probably been the best year so far in terms of quality. Every year is excellent, but this year has probably surpassed all expectations, and the best quality results and the best attention to detail and cleanliness that we've seen on farms has been this year.
And how important are these awards to the winners? What does it mean to them?
Look, it's the culmination of a lifetime achievement in terms of what they do best: processing milk and getting milk from their cows and getting it cleanly and efficiently from their cows. That's what it's all about, and that's what these farmers do day in, day out. So the best quality that they can produce is, of course, very much financially worthwhile to them, but secondly, in terms of the pride that they take in their farms, in terms of what they do, they value this award enormously.
Okay, well, we'll be speaking to the winner soon once the winner's announced, so thanks very much, Jack.
Thanks, Amy.
The winner of the overall National Milk Quality Awards was announced later as Ciarán and Catherine O'Sullivan, who farm in Dunmanus, County Cork. The O'Sullivans supply the Drina Co-op and farm 107 hectares and have 124 cows. Dairy editor Jack Kennedy caught up with an emotional Ciarán after the announcement.
Ciarán, you're very emotional about the win.
I mean, it's a huge honour. It's something you could only dream about in a lifetime. I thought this only happened to other people. I never thought it could come to our doorstep.
The celebrations are going to go on long and hard. Yeah, I think into West Cork. Yeah, there won't be a cow milk in West Cork for the next week.
That's one thing we're going to do in Glambia, to celebrate again. And we'll celebrate this too.
What was the key aspect you think that pushed you across the line in terms of winning it?
I don't know really, but maybe it's just our attention to detail. But I think maybe to the passion we have that came across, maybe that there's no other way of doing this job. Only doing one way, that's the right way. I think maybe that's what came across. I don't know what it is. I mean, there's other people just good results to us, but I think maybe it's just that commitment to producing quality milk and thinking of the consumer, it's so important.
Correct. Yeah. You have a big team behind you, Ciarán. I know you'd like to mention them all.
Yes, I know, yeah. But look, my wife, Catherine and Carl, they're my immediate team, and my parents were there all the time back along. They're more elderly now, but they're still willing to help out if they're needed.
Ciarán, well done. Go and celebrate.
Okay, thanks, sir.
Thank you.
The Irish Farmers Journal Weekly Podcast, brought to you by Ornua, the home of Irish dairy.
While the maize harvest is in full swing here, my colleague Paula Melvin talked to a German farmer who has a very different view of the crop. Where Henrik Besse is from, maize rather than grass is the winter feed of choice for cattle.
At the moment, we're after coming off the back of National Potato Day in Ireland. You grow potatoes in Germany?
Yeah, we are growing 4 hectares, about industrial for getting out the starch, and another hectare for consumption, what we're selling directly to our customers on the farm.
So you do not sell to suppliers at all?
No, all directly or to the industry.
And Agritechnica is coming up very, very shortly. Is that near you in Germany, and why should Irish people go to it?
Oh, it's just 70 kilometers from me by a car. It's under an hour to go there. And it's always fun to meet international farmers, have a look at new machinery. Good parties on at night. Everybody have a agricultural background. Maybe this year is not so passionate because of the low prices for all the grain, and even the teddy boys got not too much money, and the milk is worthless right now, and the pigs are down as well. But for this happening, for this week, everybody will get out the last money and have a good time.
In Ireland, and I do believe in France and Europe wide, they were protesting on the milk, about the milk prices especially. Were you out on the streets yourself in Germany?
I had a report, a job interview on that day, so I can't go, but there were 4,000 farmers protesting in Hanover, where the minister were on, but they were really friendly, not like in France. So German are really demonstrating really low, so not like in France, we're destroying something of driving slurry on the street or putting some dung on the street. Real behaved, just for the reforms they want to do with us, for changing the politics, not for the market. We can't change the market right now.
I hear the cost of producing a pint of milk or a litre of milk in Germany is very, very high. You have very high production costs.
Yeah, the best man I know is about 28 cents. It's a break-even point for him, but he's running 800 cows and is really professional. For us at home, it's 34.5 cents per litre to produce. And right now, the milk price is at 27 and a half in average, which means with every litre we are losing over 7 cents. So you go into shed every morning and every night and think, losing money could be a better hobby to spend money on, for example, drinks or yogurts.
Very good. Well, you mentioned being in the shed. Are your cows indoors or outdoors? Indoors all year, or are they outdoor as well?
Indoor all year, but for 2 hours in the summertime, 2 hours per day, they got to go for a walk outside because it's good for their health. They're breathing better when they get spring feelings outside. Some fresh air around the nose can run a bit, but for getting their forage and all their feeding stuff to eat more, to eat enough to make our average yield from 9,200 litres a year. Right now, we need to get all the concentrate inside, so no grazing outside, just for 2 hours walk every day.
We love giving our bulls, especially, a lot of potatoes. Do you use the waste of the spuds, the potatoes, to feed your cattle at all?
We are using them a bit, but we can also sell them at the industry. So we drive them to the factory, because feeding potatoes to cattle is a bit difficult. It's the wrong carbohydrates. It's too fast in the stomach, and it makes a bad feed. So they're not running really good anymore if they're indoor all year and eating too much potatoes. And they're sorting out the mix. If you have it in your forage mix, they're sorting out and don't eat the grass. They just want to eat the potatoes, and you have to shift it on 100 times a day. So I'm not a fan of feeding potatoes to cattle.
Well, we give another one of your crops as feed to our cattle, maize. Would you give the waste of that to cattle at all, or do you use it to feed cattle at all?
We are running about 30% of our mix is maize silage, which the rest, what's left, goes into a biodigester, what we are invested in as well. So 50% of our area, which is about 40 hectares, it's maize silage. 8 hectares of that is for the cows.
And the way we grow grass in Ireland, that it's everywhere, it's numerous, is that the way you could nearly grow maize in Germany, that it's that suitable?
Yeah, grass is just growing there where you can't do arable farming. It's wet and small blocks or small fields where you grow grass, because it's too expensive. You need to cut it 4 times and have only the yield of 1 hectare from maize, what you cut once. So even it's a higher price per energy what you have to pay for when you make on grass. So everybody's willing to do arable farming and as many maize as they can, and grass is just for fields what you can't do anything else with.
And the last thing you grow then is barley. What do you use, winter barley or spring?
Yeah, winter barley. There are some some spring barleys in Germany as well for brewing, but it's not so high in motion. But not a lot are interested in that because the yield's down and the prices were just average. So per hectare, it's a lower price you get than when you make winter barley. And when you got maize in your turnover, have a gap in the winter. So with a winter barley, you have a green field all year round, and that we are interested as well. So using all the time that things grow on the field.
It's Holsteins you're milking yourself?
Yeah, we are breeding and milking Holsteins. Yeah, just thinking right now to stop with a offspring, so the aftercoming. So sell all the calves or make some beef on the dairy, that you get a beef calf what you can fatten up and sell. So and all new heifers you need you're gonna buy, because we have too much work to do, and I got a new job, so we changed that system as well.
Congratulations on the new job. Is it in agriculture?
Yeah, it's because my college went really well. A big trading company asked me to be consulting. They want to create a new job, and it's about arable consulting to tell the guys which variety they have to grow, which chemical to spray, which fertilizer.
Henrich, gur mille mágat, vielen Dank for the interview, and best luck at the conference here.
Thank you very much for interviewing me, and my best wishes to the guys in Ireland.
You're listening to the Irish Farmers Journal podcast, brought to you by Ornua, the home of Irish dairy.
Finally, let's pause for a moment and think about our own health. The Movember campaign is coming up, and we at the Irish Farmers Journal were the most successful fundraisers for the Men's Health Initiative last year. This time we're taking it up a level, as Peter Young and Anya Hennessy explain.
This is a campaign to raise awareness and get the conversation started about men's health. We know that farmers actually look after their animals better than themselves, so we want this November for farmers to actually look after their own health. We started last year in the Irish Farmers Journal. We had this campaign, Farmers Growing for Movember. Movember is a charity which, to raise awareness of health, like the prostate cancer, testicular cancer, mental health as well, and general health. And a lot of the money raised goes to the Irish Cancer Society. So we raised 38,000 last year in the journal. This year we've taken a step further. We've joined up with ICOS Marts, we've joined up with Full Health, and we're doing 6 free health checks around the country during the month of November. We also want farmers to join us in this campaign to start growing moustaches themselves and raising money, but also, if you don't want to do that, to donate to the Movember campaign.
Now, to illustrate a bit the issues you're talking about, Anya talked to some of the ambassadors who will be telling their stories about men's health throughout the month. Anya, what have you heard? Who are the people you've met about this?
Well, I spoke to 4 different guys in the farming industry about Movember and about men's health. So the first one I spoke to was Ray Doyle. Ray is the Livestock and Environmental Services Executive at ICOS. So he got all the marts on board the Movember campaign this year. And Ray spoke to me about his own health this year. He was diagnosed with blood pressure and with very high cholesterol, so it was a big concern to him. And he's working really hard on his health now, trying to get his health and fitness on track. He's working on his diet really hard. He's cut out cakes and all sorts of sweet stuff like that. And he's going back for a health check now in the next few weeks, and hopefully everything will improve on that side of things for him.
Any other examples of ambassadors you've talked to?
Yeah, so I spoke to Julian Hughes. He is a contributor here at the Irish Farmers Journal, and he's a vegetable farmer. And he spoke to me about his diagnosis of testicular cancer. So he's been undergoing chemotherapy the past few months for that. And he's after getting the all clear, so that's very good. But he was talking to me about, the whole process and becoming as bald as an egg, as he said to me. And yeah, just the kind of ups and downs of cancer, and just trying to warn farmers out there to, if they have any concerns, to go and to get checked before it's too late.
That's really the key message, isn't it?
Yeah.
And maybe the other two as well, is to take things in time and to not wait, as many people do, unfortunately, until it's too late.
Yeah, so I spoke to David Kerr as well. He's a dairy farmer in Laois, and he spoke to me about his battle with depression and how basically the whole farm was shut down for about 6 months because of his depression, and just advising farmers that if they are concerned, or if something's getting them down, to just talk to friends, talk to family members, make them aware, and just to talk basically, because there is stigma there, when it comes to depression in the farming community, and farmers just don't really talk about it enough. So it's just to kind of get the word out there.
And who was the fourth person you talked to?
I also spoke to Mike McGann from Animal Health Ireland. He was diagnosed with being overweight, and then he also had very high cholesterol. So I suppose the ironic thing with him was he works for Animal Health Ireland, and he's always talking about guys looking after their animals on the farm, but guys can't even look after themselves. So how can they be expected to look after their animals when their own health is suffering? So we're just trying to get that message out there as well.
Definitely, and as Peter was saying, people looking after the farm first, but in the examples you're talking about, the farm actually suffers when the health of the farmer is affected, so there's no way around the circle there. Peter, what is happening next? How can people get involved and really support the campaign and take part?
Yeah, we have a lot of different activities, and I mean, we're going on countrywide next Saturday, and Damien O'Reilly is actually joining the campaign as well, and we have GA players around. But I mean, I suppose the key focus is the 6 smart health checks that are going on around the country. I mean, the first of them is in Roscommon on the 30th of October, and we're asking farmers, I suppose, to book in for a health check there, to go along on the day. And then, I mean, looking around the country, we're in Raphoe on the 5th of November, and we're in Corran Martin in Cork on the 10th. In the 11th, we're in Castle Island in Kerry. The 17th, we're in Ennis, and then we're finishing in Kilkenny Mart on the 19th. So, I mean, it's in Country Living this week. We have a page over the next 5 weeks of those stories, and also of how to treat, how to identify blood pressure, cholesterol, and what to do about it. This is about raising awareness. It's about having fun as well, I suppose. And I mean, that's why we want to get people involved. We had great fun last year in the Movember campaign. I mean, most people don't want to grow a moustache or won't grow a moustache. So this is the 1 month you actually can grow it, have a bit of fun with it, and raise a bit of funds as well.
All right, and I've committed myself to turn my beard into a moustache, so I'm preparing for that mentally, and you can find all the details online at farmersjournal.ie/Movember.
The Irish Farmers Journal podcast online at farmersjournal.ie, on the Irish Farmers Journal app, and on iTunes every Thursday. Brought to you by Ornua, the home of Irish dairy.